Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back KS family. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Let's run the numbers. Bitcoin is currently down 1.3% to 2195. Ethereum is down 4.05% to 1512. Our global family is over 15,000 strong, and many people are going through some severe life pullbacks, and it can be themselves or their partners or their loved ones. And I just want to let everybody know that if you're going through a life pullback, our global community, our global families, love and healing thoughts are with you and your loved ones. You're not alone. There is always hope, and the sun will come out again. It's really important to focus on the positive side of life. You can find positivity in anything. I remember when I was in hospital and diagnosed with brain cancer and basically given 1 month, 4 weeks to live until my brain died. I remember just looking out the window of the hospital and saying, wow, it's so beautiful out there. You can find meaning in anything. And it's also very, very important to have a fighter's spirit. Just fight it, whatever it is. And when I say fight it, I mean don't succumb. A lot of times doctors say that particular things will happen. You don't want to point the bone at yourself. The concept is just because a doctor says something or you hear it, something that you don't like, just don't ascribe to it. Don't put weight into it. Say, yeah, okay, but I'm getting better. If you're going through anxiety or depression, and that happens to everybody through this world is really tough. The fastest way to get out of those feelings is through positive excellence. What you will find, if you change your mindset, your life can change. And if you have loved ones that you're looking after and they're very ill, having a positive excellence mindset can really help. Having kindness, integrity, decency, gratitude, happiness, creating inner and outer peace in circumstances where it just doesn't exist is a gift that you give to people. Please stay strong and have courage. Build your courage and starve your fears. In the past trading session, we saw the Federal Reserve raising interest rates 75 basis points as expected. And we can see the markets were not too happy about this. In fact, the market responded very badly, suffering the worst Fed day since January 2021. And this is the fourth 75 basis point increase in the federal funds rate. However, the Fed is putting on the table that smaller rate hikes are on the horizon. The federal funds rate is anticipated to actually peak around April 2023. It's expected to stay around the 5% mark. And this is why I've been sharing this particular chart with you. It's one chart that helps you to put everything in context, the entire economic system. You can see the 2-year, the 20-year, the 5-year, the 30-year, and the 10-year all coming up at the moment. And the federal funds rate prediction for the April 2023 period is currently 4.995%. What's more important is that you can see how these correlations play out inversely on the NASDAQ and Bitcoin. Of course, the NASDAQ is just one main index that we track. If we put the S&P 500 on here, we'll see the same kind of thing. So why don't we go ahead and do that right now? You can see the S&P 500 in this light blue. And Masterclass students, you get my live chart in LV24 of the CryptoTradingKS Masterclass. At the next FOMC meeting, they are expecting the federal funds rate to increase by 50 basis points and assigning a 56.8% probability of that. And Masterclass students, keep your eye on the chart shared in LV16. It covers the global markets. One thing that's important to keep you on your radar, when you look at the VIX has been coming down, which means fear is coming out of the market. We've seen it flatline just around the past couple of trading sessions. But the real issue is prices have come down, the indexes have come down. Why is this important? Why do I raise anything to do with the VIX and the indices? Because the VIX hasn't even spiked up yet, and we've seen big sell-offs. Can you imagine what could happen if the VIX starts to spike up and it's long overdue? Let's just zoom in to the VIX. How do you do that? When you've got an 8 chart, just go to this little guide down here, toggle maximize chart, and just click it. Right, we're in. Now let's talk about the VIX. What we actually see in the VIX is very spiky by nature. We've seen some really strange behavior in the VIX recently. One thing that we're actually waiting for is a big blow off top in the VIX. Why are we waiting for this? Because when we get a blow off top, it tends to hammer in the bottom. And that's what we're waiting for. As soon as we get the bottom, that's fantastic. Now, let's have a look at what happened back in the C19 US liquidity crisis. We had a big spike up as the markets completely melted down. We haven't seen anything like this. And you might be saying, Ken, what do you want to see something like that for? Because these times, if you're prepared for them, mark the absolute best time to be in the market. And you may say, Ken, how can that be? I'm all invested. My investments just sink in value. When you're trading, you always put a portion of your trading account into cash to actually take advantage of these kind of spikes. They can be incredibly profitable, but they can take a bit of time to play out, and you do need to actually analyze the markets each and every day to understand where the key institutional buy and sell levels are, and we'll definitely go through those. What we are looking for now is the VIX to spike up at least into the 36 range. That will help us to get some kind of shakeout inside the market. Higher is even better. Are we looking for such a spike tomorrow or the next day or the next week? It may not happen. The concept is we're keeping our eyes and minds open for one of these big spikes up here because they're incredibly profitable if you are prepared. And the key is being prepared and not scared. And that is rule 252. We basically must embrace the volatility of the markets. Masterclass students, you receive this live chart in TM6. When we see bond yields starting to consolidate, just twitching up a little bit, and bond prices continuing to come down, this is not a healthy sign inside the market. This bond rout has been the biggest problem in the bond market for many decades. We can see the US dollar currency index just forging up at the moment. It hasn't hit gold so badly, which is really good, but we must be aware that the dollar is on a rampage at the moment. And when the dollar is rampaging, the markets will come down. And that's at the present time. Sometimes you find the dollar will come up and markets will come up. That's not the case right now. We can see oil is still in an uptrend, and junk bonds have decided to lose their risk appetite, which further reinforces the drop in the major indices. Inflation is front and center at the moment, and we can see the Fed balance sheet has been decreasing. It's been rolling over. When the money comes out of the economic system, this is what's actually happening. It actually increases interest rates. That's their position, and that's what they're doing. Demand destruction. And you can see it's not altering interest rates that much. The 5-year break-even and the 10-year break-even, 5-year forward inflation expectation rate, they're still going up. Masterclass students, you get my live chart in TM4, and the concept of the masterclass is to do deep dives into all of these areas. Global markets remain under pressure, and when we look across the major indexes globally, we can see China is particularly hard hit, And Masterclass students, you'll get this live chart in LV19. Inside the Masterclass, inside the LV section, I actually update on key issues that impact the economic system. And I wanted to share with you LV20 government data and the CTKS MC recession indicator. In LV20, I go through each of these charts, but it's really good to get your bearings. What you can see is the effective federal funds rate is currently registering at 3.08%. The United States interest rate is 4%. What you can see, 30-year fixed rate mortgage average is 7.08%. And a couple of other things. The particular personal savings as percentage is only 3.3%. The unemployment rate is reflecting the job market is very strong at the moment. It's only 3.5%. And this unemployment rate has come down since around the first peak of Bitcoin. And we can see consumer sentiment from UOM is just plummeting recently. It may be starting to get a bit of a turning point here, so just be aware of that. The cold hard truth is that the Fed wants to see unemployment rising, the initial claims spiking up. We've not seen that yet because the job market is just so strong. And Masterclass students, please keep an eye on the charts that I share with you. One thing to keep in mind is the S&P 500 futures was rejected from this very strong level of once resistance, tried to turn it to support but couldn't do so, reconfirmed it as a resistance level and dropped down to the next major support level, but it absolutely sliced right through this. There's negative momentum inside the markets at the present time. We know the price moves in a wave, and there's an absolutely strong support line at 37, 41 and 75. So we could see price continue to come down and potentially overstretch this level, or we could see price come back and retest this higher once support, now resistance line at 38.40. The S&P 500 futures are 37.68.25. Now, why do we look at this? Because we're all about crypto. Because this is what smart money and professionals do. We can see the directional correlation between the S&P 500 and Bitcoin is absolutely playing out to a T. When the S&P 500 futures goes down, we would expect Bitcoin to go down as well. They may not follow directly, so just don't think there's a one-to-one relationship, but the overall idea is in play. So this is what you must keep your eye on. There are going to be so many advantages coming up. Keep your opportunity mindset front and center. Just evict fear and install courage. Another thing to be very mindful of, as the S&P 500 was hitting resistance, the DXY was hitting support, and this was smart money support. We saw the 111.235 and the 111.031 lines actually very much hold, even though there was a dip below. And we've shot currently up to a smart money resistance at 112.098. The DXY is currently 112.108. So where could the DXY be going next? Through the masterclass, the first thing that people learn is how to draw up their charts with the CTKS method. That will reveal smart money buy and sell levels. Returning to the DXY, we can see that we've got some very strong support levels down here at 111.235 and 111.031. The next real major restriction in the market is 114.519. So you can imagine what could happen if the dollar gets magnetized up to this 114.519 level. The markets will basically melt down, which, if you're prepared, is a fantastic opportunity for you. You always want to have that courage, not fear mindset. And the only way you can get rid of fear is with knowledge. You need to be able to look at the market like what we do each and every day here. The more probable scenario is that we may waver around between these different resistance and support levels just for a while. We could even come back and form a higher low above this support and potentially resume up. The next major levels, because there's a few of them there, and these are structural levels. This is not based on recent price action. This is based on all of price action, are between 112.765 and 113.038. The reason that we look at this is really important to look at, but why? The reason why is that Bitcoin is exhibiting an inverse relationship with the DXY at the moment. When the DXY spiked down, Bitcoin and crypto spiked up. But look at what happened when the DXY started to spike up. Crypto and Bitcoin literally melted down. And when you look at the current heat map, this is what you're seeing. You're seeing the impact of the DXY. And if you're just in the stock market, again, you're seeing the impact of the DXY. Of course, it's a little more complex than that, but the DXY is something that you must keep your eyes on. There are absolutely enormous opportunities in periods of time, periods of turbulence like this, but the key is to just break out of the fear-based mindset into a courage-based one. To do that, the best thing that you can do is to learn how the markets work. Now let's look at total crypto market cap. We can see the rejection. And what we were saying previously, price will reveal its path to you. We were in the red area for quite some time, and we've been rejected from this overhead resistance level, especially the $1 trillion market capitalization crypto-wide. Remember, these are Stanfield levels. Stanfield levels are not formed by recent price action. They're formed through the CTKS method using all of price action. And what we actually see here, we've lost one level of once, well, very, very minor support, pretty much always resistance. And this resistance level will actually magnetize this lower support level at around 924.54 billion. So we can look at the entire crypto market as a particular one chart and say it's quite possible that we're coming down to this 924.54 level if negative price momentum just keeps on going in the market. And we can see there are many reasons that this could happen, but don't just box yourself into one position. You must think three-dimensionally. And why is that? Because of Rule 114 that's shared inside the Masterclass. Markets penalize certainty. How do we break ourselves out of certainty? We always think in terms of three dimensions. What would happen to our portfolio if prices went down, went neutral, or went up? And we consider that as the first factor in our daily three-dimensional risk management code. And I go through this in incredible depth in episode 685. Then we think, how would this play out on my portfolio? And how synchronized in do I feel with the market at the moment? The market is always trying to desynchronize you. Just beware of that. And very, very importantly, the market controls the returns, and your returns in the market will be based on your active learning, the intersection of your knowledge and your courage, and the market penalizes blame and gambling. Remember also that you control your trade or investment. So just always think of that. If you're feeling that things are not going as expected, you can just scale back. And if things are going as expected, you can scale up. When we look at Bitcoin, we're seeing a similar thing play out. We had, well, the current price of Bitcoin is 20,143. We had very strong levels of resistance at 20,766, and these are updated Stanfield levels. Stanfield levels will update. They're not just static. And what we've seen here, we've had a rejection. So price was trying, Bitcoin was trying to get above these resistance levels, but failing. And you can see as inside the markets, the major indices were also coming into very strong resistance levels. Now what's happened because of the Fed raising interest rates? Well, the federal funds rate by 75 basis points. We've had a rejection away from these resistance lines. Does it mean it's guaranteed that the market will just come down now and just plummet? No, not at all. That's not guaranteed whatsoever. I remember when I was trading the COVID sell-off, it was just incredible. Prices were rallying when they hit the bottom, and they were rallying up, and everybody was saying it can't last, it's going to go down more, but it didn't do so. Just have a really, really open mind. One thing that we do have to bear in mind, the Armageddon line is 18,942. And what's the issue with the Armageddon line? There's not much support below the Armageddon line, as you can see. The next major level, well, we've got a small one at 18,662, but the next major one, and it's not that major actually, is 16,626. So just be aware that you can get spikes inside the market when there is an absence of strong support. But the good thing is that we have a level of support at 19,641 and 77 cents. So that's potentially the next stop if we see negative price momentum. And we can always think that we could come down to that 19,641 and just come up to form a lower high and resume down. But if we actually do the unexpected, if we break through this 20,766 and of course the 20,539 mark, well, there's not a lot of resistance up there either. We're in a very interesting time in the market. It could go either way. So always remember to do your code each and every day. You want to stay as synchronized in with the market as you possibly can. Max Pain is still at 20,000 on Friday, the 4th of November. Don't forget, on the weekly basis, we're just literally coming in to test support. We know recently that a lot of shorts got liquidated and squeezed, and this actually creates a disproportionate probability that longs will get squeezed at some time as well. And what have we seen here? The longs obviously were getting squeezed, and we can see also the shorts are starting to increase. And Masterclass students, you get my live chart in TG34, but you will also get an explanation of these things. In the past 24 hours, 180.23 million has been liquidated across 81,649 positions. And when we look to total liquidations across the past 24 hours, about 71% have been long. What about the past 12 hours? Let's call it 72% long. What about the past 4 hours? Around 71% long. What about the past hour? Nearly 69% long. So you can see that the longs have been hit severely around the head, but this doesn't compare at all with the short squeezes that occurred over the past week and a bit. With crypto, there's always something that is rallying, and over the past 24 hours, the greatest gainers, Litecoin up 8.73%, Mina 4.92%, Chili's 5.39%, Leo 2.89%, BAT, Basic Attention Token 2.6% roughly. Flipping to the other side, the greatest losers, Chain XCN down 17.24%, Aptos down 10.5%, Lunacy down 9.59%, Doge down 9%, SHIB down 8.2%, USDC down 7.14%, and SAN down 7.07%. Always remember that your beloved alts cannot escape Bitcoin's gravity. 99% of alts will come down when Bitcoin comes down directionally. So just be aware of that. But we're always looking for the other 1% that goes the other way. Looking on a 5-minute chart just allows us to see the gravitational synchronization of Bitcoin over your beloved different alt projects. And when we look at Ethereum, we saw Ethereum Bitcoin spike. Ethereum spike right with it. Don't forget, this is 5-minute chart. And as Bitcoin sold down, what happened to Ethereum? It sold down as well. We can see the same kind of thing in BNB. What happened in ADA? Same kind of thing. you can see Bitcoin's gravity is absolutely rock solid. Now we're starting to see some really interesting things, and this is what we want to keep our eye on. Look at this little uptick with Ethereum. There's not much of one. BNB's got a slight uptick. When we look at ADA, not bad. But look at XRP. It's just recovering. It's recovering really, really well. It would be like ADA recovering up to here, or ETH up to here. Just keep your eye on that. And we can see Solana selling down with Bitcoin's gravity. Doge has recovered really quite well. We're after these very spiky things to trade. And we can see DOT recovering mildly. And Matic just recovering in a similar way, just perhaps a little bit weaker than most, actually. We are always trying to hunt out that 1% that moves opposite, because they can be really good hedges. We can see Tron just in alignment with Bitcoin's gravity. SHIB also in alignment. Uni putting in a very, very good rebound. AVAX putting in a good rebound as well. But look at Litecoin. Litecoin is doing incredibly well relative to the other cryptos. Link just doing a similar thing to what Tron and ETH are doing. Atom pretty much the same, and FTT pretty much the same as well. But Litecoin is quite outstanding. When you get major in-market sell-offs, it's good to keep your eye on what recovered most quickly. We can see XLM recovering quite well. NEAR not doing a bad job, but look at Algo. Algo is absolutely romping up. Excellent. Well done. Quant just doing the basic same. Flow is recovering well. VET just putting in a little bit of a leg up, as is Filecoin. Lunacy not looking too crash hot at the moment. We can see recently that Ape has been quite weak. Poor old Ape, not going too well. HBAR recovered quite nicely there. ICP moving in directional alignment. EGLD, Elron, looking not bad. That's quite a kick up there. XTZ, not looking too bad at all. Came down but recovered quite well. We can see Aptos, APT, just literally under pressure at the moment. Chili's bucking the trend, one of the 1%. Go Chili's. And we can see Mana just melting at the moment. But don't forget, the weak become strong. The more divergence between gravitational alignment, the more the slingshot back into synchronicity, into alignment. So these can be very, very interesting to watch. But don't gamble. Make sure you know what you're doing. Going deeper into the top crypto projects, we can see Aave just following what is very much like ETH's gravity. Sand not doing too badly. That's a very good kick up there. EOS quite weak. We can see Theta just recovering quite nicely. Maker is quite weak. Axie is quite weak as well. IOTA is flattening out. Quite interesting pattern. And Synthetics just flattening out as well. Just recovering back to that resistance line. Digging in even more deeply, we can see Clayton just weaker than Bitcoin's gravity, but it just recently put in a huge rally, so that's not surprising. The graph continuing to show weakness. Phantom just on its way down, just following Bitcoin's gravity, but just a little bit weaker at the moment. And we can see HNT, Helium, following Bitcoin's gravitational alignment. It was stronger and now weaker. This is always on the cards, so just bear this in mind. And we can see Nexo selling off in alignment with Bitcoin's gravity. LDO staging quite a nice recovery there at the present time. Rune quite a bit weaker, and we can see CRV spiking all over the place. There are 4 stages or zones that all investors and traders progress through to become consistently profitable and attain meaning in life. And meaning is important. You don't want to end up like Jesse Livermore. Once upon a time, he was the richest man on the planet for a short time, and unfortunately came to an end at his own hands. Having money without meaning is just another form of poverty. Balance is really, really important. Zone 1 and Zone 2 are the retail zones. Zone 3 and Zone 4 are the smart money zones. In Zone 1 and Zone 2, fear governs people's behaviors. No wonder they lose money. Acting on fear always creates the thing that you fear. Do not act out of fear. It's a big, big mistake, and it takes a long time to realize that. Zone 3 and Zone 4 are the courage and learning zones. Courage is particularly important at a time like this. So many people will just be based on fear and leave the market when the best songs are going to start to play. To get to Zone 3 and Zone 4 and stay there, courage is an incredibly important thing, and positive excellence is the way to live your life. Because positive excellence, you do the right thing and the right things will follow. Do the wrong things and the wrong things will follow. It's just a law of the universe. I thought it would be really good, because of the market conditions today, to talk about courage and share your ideas and concepts with others. It can be really, really helpful to those who read it, and I'll read them out as well tomorrow. And I wanted to let you know, across the weekend, I'll be announcing the Jason Rice CTKS Partial Master Scholarship Awardee. And Jason has been so incredibly generous, as have all the other people who have put forward partial masterclass scholarships. Jason has put forward too. Just amazing. I'll announce that across the weekend. I'd like to thank all our beloved global family members for your comments each and every day. You're just amazing people. We have such an incredible global family. Please reach out and just say hi if you've been sitting on the sidelines. We'd absolutely love to say hi back. And it's so important to pop in your BORSOG codes. That will keep you synchronized in with the market. And around Fed time, the BORSOG codes can be all over the place because the Fed is very unpredictable. To gain courage, it's really important that you dethrone the dictator of fear. Fear is definitely a dictator because it doesn't care at all about you. It only cares about itself. Courage is completely different. It cares deeply for you. Courage wants you to succeed in life. Overcoming fear, literally doing a coup on fear, is really difficult to do. Fear enters our lives because we need to survive. But if fear takes over our life, we'll see every situation as a survival event. It will just be literally like we're fighting for our lives each and every second, each and every minute of each and every day. That anxiety-based situation will of course exhaust people, and eventually they will become depressed. That's where courage comes in. Courage is about confidence. It's about saying, I've got this. Fear will seek perfection and drive you into anxiety and depression. What does courage do? It seeks learning. Fear tries to undermine your personality. It tries to say, you're simply not good enough. Everybody's got it out for you. Courage refocuses your attention away from fear and basically says, okay, I've got this. I can do this. I know I will succeed. Maybe I have to learn a bit, but I know I'll get there. And people are not against me. I can only be against myself. Courage changes all the rules in your favor. And that's why in the CTKS Creed, we say, I win or learn and never blame. Blame is the benchmark of fear. If you're blaming, you're fearful. If you're learning, you are courageous. And if you have friends or family who could benefit from positive excellence and what we do each and every day here, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Stay safe out there, my friends. Take care and see you next time. Bye for now.